Good morning, nieces and nephews. So far, the SPY is consolidating a bit in the pre-market, trying to figure out what it probably wants to do for the market hours. But we have to remember the context. Yesterday, SPY broke down the 5 daily moving average, which I've mentioned multiple times. When it's bullish, it spends majority of its time above the 5 daily moving average. And when it starts to pull back and look bearish, it spends majority of its time below the 5 day daily moving average. And yesterday we got the breakdown of it for the first time. We broke down the 5 daily moving average, and we also broke down my fib level at 570. Okay, now guys, as sheep style traders, I always say we want to trade unbiasedly and follow the price action. But more specifically, what I'm really saying is I want us to trade with the traps, okay? Because that is what the market makers do, or the big institutional people, whatever you want to call them, okay? The market movers. That is what they do. Their goal, their plan, their job is to make this market, this trading market, as trappy as possible for us, okay? They want to make it as trappy as possible. So since we know, because I don't want to say now that we know, we've been knowing this. So since we know that this is a trappy, manipulated market, as traders, that is what we always want to watch out for. The traps. Where are the traps? Okay, if you guys been paying attention to, like Tom McKellen, for example, because of seasonality, people were saying, oh, bearish, bearish, bearish for September. And what happened in September? It ended up being a bullish month, as you guys can see. Okay, so we don't want to go based on seasonality. We don't want to go based on the news or some random YouTuber. We want to go based on the levels and the setups, the price action, and play it level to level. You look at yesterday, the market was pretty volatile intraday. And you guys see yesterday when Uncle said to look to short below 572. Look what happened. We broke down 572. Or when I mentioned look to short below 570. Okay, and look what happened. And we play it level to level style. So if you was to play the breakdown of 572, 570 is where you want to take most profits and leave a runner with your stop loss above 572. Okay, and then it should have given you a nice drop. We lost 568 and we dropped down to 566.5ish. It broke down 568 and then it consolidated, started chopping. And notice I didn't mention anything about a recapture until, if you refer back to the Discord, I didn't talk about a recapture until 1:46 p.m. Now, what was that recapture? The recapture was when SPY recaptured the 568 level after bouncing off of my 566.5-ish level. False breakdown setup combined with a potential W pattern playing out, and it gave us a nice level-to-level move. Was it a big move? No, but it was a nice level-to-level move, and you can make good money trading level-to-level if you're using options. Recapture 568, hit 570, and then the end of the day came about. Nothing much happened. It did break down 570 at the end of the day, which I alerted to, and it almost hit 568ish at the end of the day. All we're doing is knowing the levels and then playing the setups. Whatever the setup give us. False breakout, because we cleared 572 yesterday. False breakout, we want to look to short. We get a false breakdown, all right? Preferably we use some context, added with some context. Why did I alerted the false breakdown yesterday at 146, but not these? Because I didn't trust these. We had a big drop. Probably market needed to consolidate. That's when your knowledge of knowing how the market moves a little bit can help. So after a directional move down, some consolidation would have been nice, but I wanted to see a pattern form, which was the W pattern. That gave me enough confidence to let you guys know, hey, his 568 level might be a good one. Okay, none of this is guaranteed. None of this is guaranteed. That's why I said we want to approach this with an unbiased but not little bit of greed, no greed at all if possible approach. Okay, a no greed approach, right? Level to level. We could probably get bigger moves, bit more money if we get those actual home run moves, but those home run moves are not guaranteed. So I'd rather play it safe, level to level. And if we do get a home run move, my runners will catch it. And if we don't get a home run move, then my runners will hit its stop loss and I'm overall green on the trade because I took profits on the majority of position. Does that make sense, guys? So watch out for the traps. Now, how do we watch out for the traps? We got to look at the levels that were lost yesterday. Okay, so we closed at 568.6 yesterday. Didn't break down my 568 level, but it did break down 570, and I'm going to round it up to 572. Okay, but it's around the 5 daily moving average. Unless SPY can recapture those levels, okay, I wouldn't recommend calls just yet. Okay, if SPY recaptures those levels, if SPY can get back above 568, if it can get back above 570 and recapture the 5 daily moving average, then that's when I would recommend going long with 573.6, 575, 576.5, and 578 all in play. Okay, and it's important we know the bull case scenario because we don't want to get trapped here. We don't want to get trapped. All right, remember, a lot of people were bearish in September, and then what happened? And look how September started. September started bearishly as well, and everyone was getting bearish. Oh, September's bearish, and then what happened? They got messed up after we got the false breakdown setup. After we got a false breakdown setup, the bears got smashed. So I'm trying to tell you guys to be like the sheep and don't get smashed by the market makers again. Okay, and follow the price action. If we are bearish, 566.5 and 565 will break down. If they break down, we're likely dropping to the 20 daily moving average, or even lower than that, possibly down to 559 because I got a fib level around there as well. Okay, but it got to break down 566.5 and 565 for more downside. And if it does, then yeah, go short, bet to the downside. All right. If it recaptures 570 and 572, go long. We're heading back up. Be able to trade in either directions, up or down. It doesn't matter. Get in, get out, get your money, throw the middle fingers up to the market makers, grab your popcorn and enjoy the show, because the market makers probably going to trick out our brothers and sisters in the retail trading that are retail traders. You understand what I'm saying, guys? That's the plan for SPY. Triple Q, similar situation where it broke down the 5 daily moving average, okay? That 5 daily moving average is all the way up at 486.2-ish, okay? It's a long ways away, all right? Bulls have a lot of work to do. And if they want to get back to the 5, they're going to have to recapture 482, recapture 43.5, clear 485, and get above 487. And above 47 is when I would be bullish, all right? If we don't get no relief bounce and we break down more support levels starting with 480 and 478.7, then guess what? More downside incoming. 476 and 474 in play. 474 is around where the 20 is, 20 daily moving average. And if the 20 doesn't hold, then we're likely dropping all the way down to 469, 465.5, and possibly all the way down to 460. Those are all possibilities, okay? All possibilities if Triple Q breaks down 480 and 478.7. Do not get bullish unless 482 and 483.5 recaptures. I can't fully get bullish unless Triple Q can get comfortably back above 487, all right? NVDA looking bearish here after a bearish engulfing candle. The bullish counterattack, no follow through. It actually been invalidated with this breakdown. As long as below 118, I am bear bias. Losing 116 would be bearish follow through to put 114, 111, and possibly 109, 109.5-ish in play. Okay, that will be the this orange uptrend line here. Okay, but I'm bearish below 118. I can't get bullish from here unless NVDA can get above 116 or 118. If those levels recaptured, then maybe I'll favor a relief bounce up to 120, maybe 122. But I can't really get bullish unless it's above 122. Yeah, the 5 daily moving average is around 121.4. So if it get back over 122, definitely would look bullish again. But as of right now, it's looking bearish. Stay bearish below 118, guys. Tesla is around 256.8-ish. Okay, I have support at 255, 253.5, and 252. Those are the levels that must break down for more downside for this pullback to continue all the way down to 250, 248, and possibly 246. If the pullback is over and we're not getting no more pullbacks, then resisting at 257 and 258.5. Must clear to put 260s, 262, and another test of 264 in play. If we clear 264, then we should get another high, maybe go all the way back up to 270s, maybe. All right, guys. And IWM looking bearish, broke down the support level 220 and 218 yesterday, testing the 216.4 fib level right now as we speak. If that level can't hold, 215, 216.6s and 211ish would be in play, gap fill. All right, trust no bounce unless lost levels are recaptured. That would take 218 and 220 to recapture to put 222 and 224 plus in play. I'm overall bearish on it as long as below 220 and 218. Okay, so those levels need a recapture to change my sentiment. All right, guys, so that's my pre-market analysis for this morning. If you guys want dog pool option flow, watch yesterday's video. Please be sure to give it a like and subscribe if you didn't. Okay, and definitely join my Discord, guys, so I can give you guys that intraday market analysis, updates, trade ideas, all that happy stuff. All right, I hope to see you guys one of these days in the sheets then. Peace.